It's day 2 here at Pay 360 here in London, and I'm joined here with Lee McNabb from NatWest's. Lee, thank you for taking your time to speak with me today. I was just wondering, what are some of the emerging payment trends right now that NatWest and yourself have been observing over the past couple of years?
So thank you for having me. Day 2, as you say. So payments at NatWest, right? So my role is kind of looking at group strategy for payments. So a lot of the time is spent kind of events like this, engaging with the market, understanding what is coming next. I think to answer the question about those trends, we've got kind of the digital currency, digital asset worlds. Will we see a CBDC? Will the stablecoin policies in the US have a ripple across to the UK, TBC? AI, the role it can play either operationally, efficiency-wise, or kind of agentic AI, so machine-to-machine engagement with payments. I guess the broader digital landscape as we go deeper into digital payments. What will the schemes do? What will the schemes do in the likes of account-to-account as we look to provide more choice and an alternative to the kind of traditional card rails? Probably a big question mark, and I'm on a panel in a bit around, well, what does digital ID have, or what's the role of digital ID in that future digitization as we are more digitally payment active? Do we not need a digital ID to kind of back that up?
I couldn't agree more on the digital currency aspect, because it's something we've been covering quite extensively on Payment Expert. I was just wondering, now with the surge in stablecoins, what are some of the barriers right now from a traditional banking perspective where we could start to foster some of that growth within stablecoins? Or cryptocurrencies, I guess.
So we focus on stablecoin first. It's an interesting one, right? Because there's no doubt there is genuine, credible scale. I mean, we're talking billions of pounds in market cap, or dollars in market cap, trillions of dollars moved in stablecoin. They've been around for circa 10 years. But I think what's changing now is where they've always been primarily kind of like an on and off ramp into traditional finance versus decentralized finance. What we're seeing now is actually a lot more, I guess, credibility with the moves in the US. So from a regulatory perspective, from an executive order perspective, what's going to happen as they gain more kind of understanding, more traction, and they move from just being held for value, just being used cross-border where maybe the rails are not where they need to be, or there's no SWIFT involvement, being held in countries where the fiat is probably more volatile than a digital version of dollar, or they can't get a bank account. As that starts to kind of proliferate into day-to-day usage, as acquirers start to offer it to merchants, we saw Stripe acquire Bridge. Bridge is an infrastructure for stablecoin, over $1 billion, I think. That's real significant news, right? As a bank like us, where we're primarily UK, but we have huge corporates moving money cross-border, we move billions of dollars worth of trade, right, with our corporates. We as a group need to understand, well, does that impact us? Is there a role for us to play in this? We're not a global bank like a big JPM or Goldman Sachs, whatever, but we still have millions of customers wanting to move money. Stablecoin is money, just a different type. So we have to understand that risk and that opportunity.
I guess also as well that sticking on digital currencies, the central banks are now starting to discover or even implementing use cases and pilots when it comes to central bank digital currencies.
Yes.
I'm just wondering what would happen if tomorrow, for instance, NatWest were to introduce a central bank digital currency to its customers?
Well, firstly, NatWest couldn't. It has to be from the central bank.
Yeah.
Sorry to be pedantic, but there's a nuance there, because we could arguably issue our own stablecoin, but we can't issue a central bank digital currency.
Right.
Although you could argue if we tokenize our own deposits, then is that a central bank digital currency, because it's ultimately backed in some way by the central bank?
Yeah.
All these nuances need to be played into the debate, right? In the UK, we've got 2 debates running, the retail CBDC and a wholesale CBDC. They're in different kind of timelines, if you like. Retail CBDC is still in exploration. We're engaged heavily. We sit on the engagement forum that the Bank of England runs. We sit on some of the working groups that the Bank of England runs. It's very much in where's the commercial case? Where's the customer use case? And actually, where do you drive any real benefit from it? In the UK, we're quite digitally active. In fact, we're very digitally active. Most transactions now are done by debit card, via contactless, or via a wallet.
Yeah.
So you actually question, well, do you need a different type of money? The Bank of England has spoken about the lack of cash anchor, or lack of anchor from a cash perspective. But we've not had cash is probably like 4% of what we move money-wise, but cash hasn't been an anchor for over a decade, right? It's constantly been dropping in terms of payments usage. We saw a spike post-COVID where people still use it, or still holding it, but there's still a question mark around a retail CBDC. In Euroland, they're more progressed with digital euro. So we probably look at that from a UK state perspective and think, well, if Euro moves, should we move?
Yeah.
And on the other side of the pond in America, they basically said, stop talking about CBDC.
Yeah.
You can't do that anymore. So there's all these different regulatory bodies and challenges, and I don't know what's going to win out, but it's a big strategic question.
Yeah, it's a fascinating talking point, particularly when it pertains to so many digital currencies now emerging, and then where's that interoperability?
Yeah.
When it comes to all this type of stuff, and including fiat as well, right? So
Yeah, completely.
within the digital landscape as well, within banking, I know there's been a massive rise in fintech, Revolut, Langos, etc., and then also traditional banking, like yourselves and NatWest. Just wondering if there's any more cooperation or competition aspects with the role of the fintech and traditional banking at the moment.
Yeah.
25.
I mean, we're here, Pay 360. Events now in payments are kind of equally split between incumbents. Very niche fintechs that'll provide maybe cross-border opportunities or capabilities. Neobanks like the Monzo, I think Starlin have got a stand here in some part in the hall. We have to accept a kind of couple realities. One, we are in competition with a lot of the fintechs because they will try and disrupt along the value chain where we play a part in every single element. But two, we're also there to partner with them. If you opened an account with NatWest, you've probably gone through 5, 6, 7 fintechs without even realizing it. If you've used your app to make a payment through confirmation of payee, you've used a fintech called SurePay. The work we do in our core modernization from a platform perspective in payments, a lot of it's driven by a fintech called Icon that we actually invest in. So behind the scenes, a lot of the time, we're powered by fintech, right? Because we need to recognize that if they can do something better technically, capability-wise, or from an SME perspective, then actually we should leverage that and not kind of put all the burden on us as a bank. So yes, we compete, but we also partner quite readily.
Yeah, for sure. I know that you've also partnered with OpenAI, and that's whole partnership. That's really interesting to see that NatWest have become the first retail bank in the UK to partner with.
First and only.
Yeah, the first and only. That's correct. But then, just kind of closing out, Lee. Thank you for your time. This is a pretty broad question, so so apologies in advance. But we're halfway through the decade now. 5 years on, 2030. What would you summarise is what would payments look like in 2030?
2030 in the UK. Crystal Ballman. Well, it's funny, right? Because you said we're halfway through the decade, so we're actually not that far away. We're already nearly halfway through 2025. This year is evaporating. But you look at it, and to the trends I mentioned right at the start, I'd actually say you'll probably see the growth and proliferation of them. So we'll see more digitally active customers in the UK. We'll still see an element of cash. We'll see the wallets going into different parts of the market. We saw last week Google effectively saying they're going to allow wallet access to use through kind of consent from the parents, etc. I think we'll see more of a growth of digital currencies in the traditional finance space, maybe in the wholesale world, but will kind of bleed into retail. And you mentioned the OpenAI partnership. We're really proud of that as a group. But it's just an example of how all banks need to embrace this kind of AI revolution and then work out, well, how can it better the customer experience? Is it just in operational efficiencies? Is it just a bit of hype and noise? It feels different, this one. Or actually there's something that's going to drive credible differentiation. And then I think the last one I mentioned was kind of the role of digitization of verification or ID. That's a massive gap in the UK. And we need to look at how we address that, again, for customer benefit.
Yeah, brilliantly. Thank you so much for your time.
Always, thank you.